Hey guys, just doing the edit for the video that you're about to watch, which was the backtesting of the previous week. Now, I didn't trade last week for personal reasons, but if you had traded and you were using our method, you would have got somewhere between 40 and 70% if you risk 1% per trade on your account. Now, I go into a fair bit of detail on it. I use standard naked charting, not bar by bar, but it's very well detailed, and any questions, stick them in the comments. Right, in today's video, what we're going to do is we're going to go back and we're going to backtest the previous week. I wasn't able to trade it, but I did see just on a quick glance that it looked as though there was about maybe 25, 30 are available. I got knocked out of a position which I was holding from the previous week, wasn't able to trade last week just due to personal goings on. But it's best practice just to go back and have a look and see what had happened and see whether or not I'd have taken the trades and stuff. So just to save time, we're not going to do bar replay. We are going to use naked charting, but I am going to show you, as always, the strategy in a nutshell. So I'm going to draw it first, and then we're going to go through, we're going to mark up a naked chart. So exactly how I would do it when I sit down to trade. Now, best practice is to wipe your charts at the start of the day. So when you sit down to trade, preferably about 7:15 in the morning if you're in the UK, sit down to trade, wipe your charts. So just go to that, remove all drawings and start from scratch. Go through, backtest the previous, the previous night or the previous day and get to current price. So when you draw stuff out on the charts, it should look pretty current. Now, I'm gonna try to get this out maybe Wednesday or Thursday morning. It's Tuesday, 7th of May at the moment. These are my current chart markups. We've got a 67 or 70% chance that one of these are gonna work. Now, if you're thinking like, oh, okay, well, what if you have to wait until price comes down to this one? You're gonna get 1, 2, 3, 4, 5 losses and, possibly get this one. Well, if you got a 70% chance of getting a 38R trade, might as well take it. Because you've got odds on probability and it just becomes maths at that point. So you can let go of the emotional feelings behind all these trades. I've actually lost 3 this week. I took a short over here or over here, one of these. Actually, I took a short off of this earlier today. Was that today? Yeah. So I took a short there, lost. I took a long here, lost. And this one's just been knocked out as well. So 3 losses this week, doesn't matter, probabilities game. So I'm going to start off by making us a new layout. So we can just use a naked chart. I'm going to draw the strategy for you guys, really simply. I'll go through it in a little bit more detail when we're drawing it up on the actual charts. FTR is a zone-to-zone strategy. So think of it like this. You have a starting point. So we're going to say that price is starting in the middle here. It's going to go to that or that. It's really that simple. Price is going to reach the top zone or it's going to reach the bottom zone. Those zones are identified through supply and demand, support and resistance, order blocks, etc. And they are typically higher time frame zones. All right, so higher time frame. What I mean by that is we use a typical baseline of a 15-minute. Okay, so the 15M and the higher time frame is the H4 to the M15. So the iterations which we have is the 1 minute and the 15-minute as your higher time frame, the 15-minute and the 4 hour as your higher time frame, the 4 hour and the weekly as your higher time frame. There is a daily because we do get reactions off a daily as well, so you'll factor that in sometimes. But generally speaking, we mark out higher time frames first and then we drop down to lower time frames, because the reason for that is, let's say that price does work its way up to this top zone. I used to trade the daily like this. It was literally support and resistance, really, really easy. Had a high win rate, but a very, very low risk reward ratio. And I realized I was never going to get rich, or maybe I would, but it would take me like 20 odd years. So, I thought something needs to change. And it was the day when I quit trading because I decided, no, it's not for me. It just clicked. All of a sudden, it just clicked. I'm really good at figuring out where price is going to go. I'm very good at my targets. I'm very good at where it turns around. Okay, so what I realized was, what if I could just get involved in one of these zones but on a lower time frame? And that's where I started trading like the London breakout, Then I combined it with the daily strategy and we got FTR. So, you know, instead of you getting like a 1 to 2, you could get a trade which is like this, like a 1 to, well, typically like 1 to 8, 1 to 9, something like that. So add a multitude of confluences, which is really quite helpful. We can really see where the market is going to reverse on a lower time frame first. So there's a couple of chart patterns that we look for, okay? Once we've reached these zones, whether or not it's going to pass through or it's going to reverse. And we also pay attention to the time frame above what we're looking at, okay? So these being the H4s, we know that price generally bounces from H4 to H4, but it also pays attention to what happens on the daily or the weekly. So let's just say, for argument's sake, that the weekly was heading down. So overall, we're in a big downward trend on the weekly, and the H4, all what it's done is it's come into here, doesn't have to get chopped, but you know, it's a chop formation. I explain it on a lot of my videos, but just to save time, we'll skip over it. And then it might come back, retrace just to grab a little bit of liquidity out of an order block, which could be halfway down the leg, before coming back down to react, get a continuation trade, and head down to the next zone. So we knew to try to reverse from here. Maybe not get into a long on this one, but definitely try to look for a reversal short off of this. And once price passes through here with a body, we try to get in on the retracement and try and get short here and feed it down to the next zone. Now we try to look for certain patterns. We look for certain candlesticks and stuff like that on the lower time frame, just so we can get a better risk reward ratio. Now I'm going to just show you on the charts really easily as we go through. So I'm going to not paraphrase, but you know, I'm going to go through it relatively quickly. We are also going to just mark out our starting point and ending point. Oh, I'm on the wrong time frame. Actually, this might be easier doing it this way. So we've got that, and also, yeah, that's it. Drop down to the 15, see if that's right. Yep, that's the end of the week, and that was the end of the week. Right then, so I'm going to mark out my charts exactly as I would when I sit down at the start of the day or at the start of the week. And we always start off on the higher time frame, okay? So we want to identify two things. Where is price likely going to react from? So we're looking for points of interest or order blocks or supply and demand zones, or just, you know, well-known reversal candles and rejection points. And we're also going to look for direction. So we're going to look at boss and chock. So man-made structure, bit of a debate on it, but we're just going to say boss and chock for the time being. Okay, so I'm just going to point out really quickly where boss and chock is on the weekly. So weekly boss is there, and weekly chock is up here. I will go through this really briefly on the weekly, but then I'm going to power through the daily and the H4 just so we can get stuck into the action. Okay, so first of all, I'm going to go back outside of this range. Okay, so the range being, you know, up here, I'm going to go to some price action which led to it, which is here, and I'm going to go back a little bit further just to make sure that I've got everything right. Okay, so at the time, you know, we will do, no, we won't do bar replay, but effectively we got chock here. Okay, so chock was there, boss was down here, and once we got the body break of that, we ended up moving boss up here and chock went down to the bottom. Then we got the break there, chock went down there, and we just kept on bossing up, boss, boss, boss. Chock was here, we then got a break, so this turned into boss and chock went here. Okay, so boss and chock, just to explain that really quickly, it's worth doing, is you have a starting point, you have an end point. So in this case, we're going to be going up for a continuation trade. Price has to pull back, grab liquidity from something, and then press up. Okay, so we've got a highest high previously over here, and as soon as we get a break of that highest high, you know, using the same time frame. So if this is a you know, weekly leg and then a weekly leg and then a weekly leg, we need to get the weekly candle to close. Okay, so we got a break of structure right there. Why? Because the highest point got broken by this leg here. What that means now is that for us to be able to reverse, if we want to, we need to get a break of this most recent low. Okay, so the low was over here. It was over there, now it's moved. Okay, this is now the significant one. We've just gone between there and there, gone to the lowest point. This last one, you can pretty much forget about. Under certain circumstances, it does come into play, but very rare. Now, for us to play a continuation trade, we typically look for order blocks or supply and demand zones. Usually they're towards the other end, okay, so they're in the discount area. And then we're waiting for price to come back, tag us in, and come up like that, okay? And for us to confirm that the trend has continued, well, what we do is we need to get a break of that recent high. So as soon as we get the close, great, we've had boss confirmed. That means we can now look for another order block and go there, great. So really simple. Now for us to get chock, okay, which is a change of direction, okay, it's not 100% accurate, but it is high accuracy. The same formation, okay, so you're looking typically for continuation trades because you get them between 60, I think it's like 67 and 72% of the time, depending which time frame you're looking at. But generally speaking, most of the time you get that sort of step ladder approach. Now, when you get a close below the recent low, so you know you had the most recent boss up here, that was the breaker structure, price came back in, and then you also close below there, you now have chock confirmed, all right? So the change of character, the change of direction, okay? The market is switching. So that means now you need to kind of like flip your perspective on its head, because where boss was up there previously, boss now goes down here, okay? So boss goes there and chock goes there, because if we close that up, the furthest point between the previous structural area, which was broken, and where it was actually broken, go to the furthest point, and it goes to up there. That is chock, boss is here. So when price, you know, it doesn't always, but when price comes back to retrace, you want to try and get involved with a deep level entry, come down. Your target is going to be obviously a break of that, and you just keep on following it. Of course, there are times, like I always get comments from, you know, usually rookie traders. The market does this, you know, it's not as clean cut as straight up and straight down, because if it was, everybody would be making money. We know that, and that's why we use multiple time frames, because we can trade multiple iterations of where it's going up and down and sideways and whatever else you want to call it. But generally speaking, it's how the market moves, and it's how we get consistently 20R a week. And most of you don't when you're using other strategies. So that's it. All right, so next thing is we're literally going to identify the zones. So these are points of interest, they're just zones. All right, there's nothing significant about them. They're just areas where we're expecting price to reverse from. There's a few confluences that we use, don't want to go into it on this video. There's a few videos which I've got explaining it. But generally speaking, we're just looking for areas where price is likely going to reverse from. So price is here currently, there's one above, there's one below, cool. Okay, so with boss being down here, we know there's 70% chance that we're actually, you know, going to come down and hit this one before we break outside of here. However, we do have this zone, which is internal within the structure, because there's been another internal chock and boss occur. We just want to make sure that everything is moving in the right direction. So we're expecting it to come down here. This might, you know, this might play a role. So we might be working our way up to it. We're also kind of in a zone as well. Again, it's just a congestion zone. It is technically a point of interest, but we're in it already. Okay, so there's going to be a reaction. It might break through, it might pass back, but who knows? We don't know. We just have probability. Okay, so that's the weekly. Bear in mind, this is going to disappear when we drop down to a lower time frame. So my settings, which I've got, these at the moment for the weekly. So when we drop down to the daily, the weekly zones will disappear, just to bear in mind. All right, now I'm just going to plow through these really quickly. All right, so similar to the weekly, just going to identify where we may be currently. I'm going to start off literally over here, where there's a very clear boss and chock. I'm just doing this in my head quickly. Boss, chock, boss, chock, boss, chock, okay. So weekly, weekly chop, daily chop is there. And then daily boss is down here. All right, so there's going to be lots of like SMC traders and stuff out there who will disagree with where my boss and chock is, but you know, I have a better win rate and better risk reward ratio than any of those strategies and groups. So take my word for it. That's chock, that's boss, and these are the current charts. All right, so there are targets. We now need to mark out our zones. That one is unmitigated, so daily POI goes on there. So we might be heading towards that before we press back down. This has mitigated here. That is a big zone. We did identify that on our weekly call in FTR. By the way, the link for FTR is in the description below. Join us if you want. It's pretty decent. It's a premium group, so it's not a free Discord group. We do throw out dickheads from time to time, which we don't get many, but we're full of traders who just want to trade. We want to learn how to trade, do it effectively, do it properly, and we trade together generally. So lots of ideas and so on and so forth in the group. It's about 135 quid at the moment per month, but well worth it if you want to learn a lifetime skill. So there's daily ones above. There's an inside bar. There we go. Just added an inside bar indicator. Let me go rid of the shapes. I normally use pink because I like it. There we go. Just to make them stand out. For me, inside bars are significant. Okay, they're points of interest to me. So we do have a daily zone below, but it's not quite as powerful as a opposite candle. All right, so I do have statistics on it, and they're in FTR, I believe. So, right, okay, so we got that. We got the daily candle. Oh, actually, coming to think of it, we're not meant to have that on there just yet, because we're meant to be looking left of that left-hand red line. So bearing that in mind, I'm just going to try and find one below us, which is really standing out. There's lots of imbalance above it. It's swept down here. It's part of a moving chain, so this is now the extreme of the leg. So the extreme order block moves. That, I know it sounds a little bit complicated, but again, we got data on it. So that is now the extreme. And of this sort of internal, this one is now the extreme, but it's only sort of half mitigated this one. We haven't had the halfway point mitigated, which is why it's not been fully taken yet. But generally speaking, you know, this is the area which I would want a reaction from to come down, break through the daily boss, and then break through the weekly boss and try and get trades from. Okay, so that's the daily done, I think. And also its rebalance did occur. Okay, H4. So the H4, I can't mark anything up in here. I'll tell you what, I'll do bar replay at the moment, just to make it easy. Right, okay, this is what we're playing with. We have an H4 zone here. I will do the boss and chock in a sec. So H4 POI, and I'll also mark out the trade that I was in, hopefully. Is there one below? You know what, there isn't one below. There's one up here, possibly. Not very strong. Okay, not very strong. It has been rebalanced already. We were expecting a bounce off of that, which we got. I think my trade, no joke, was literally directly off the top of that. I'll go back and have a look. I'll check my broker and then swing back in a moment. 26th of April at 9:25. So yeah, it was there. It was literally there. Frustrating. But anyway, that's why we're doing the test or the check this week. All right, so I actually had a trade which was directly off like this. Very frustrating. And the target was a break of the previous low, I think. Anyway, that's kind of the H4. There isn't really anything here which is unmitigated. There is kind of this inside bar, but we have, you know, short-term bounce off of it. But that's about it. All right, that is about it. That means we can now get down to the M15, and I will just reveal the charts in a second. All right, so I'll really simply reveal the charts. We were looking at this thinking, what was there available? I think I remember in the weekly markup, there was this being discussed right here on the M15. So let me just change this. So we had that. There was also this, which was marked up by Sam. And his channel is linked below as well. So again, trades the FTR way, which is good. And there's also James, who's in the group as well, who's soon to become a coach or a mentor. Bear in mind, if you want to join mentoring or a markup service or anything like that, there is a link to a form below. We're about to launch it in the next 10 days. And when it's ready, I'll email you, you can sign up. So the markup service can be about 100 quid a month. It's ideal for those who want to learn, well, or don't really have the time to learn, but you still want to be able to profit. You know, just access to our charts really. So, you know, it's worth it. But yeah, so we had this, I had, you know, this trade, wherever it was, going short. It was up here. It was literally all the way up here. Yeah, that was it. It was an M15. Can't be off of that. It was, I think it was a 6.9 stop, so it wasn't the best. It may have been that. Yeah, so I was tagged in about there. The stop wasn't that big. Oh, maybe it was off the halfway point, and my target was initially a break of this. Yeah, that was about it. Okay, so that's the trade that I was carrying into the week. I will hold trades over the weekend, and I'll hold trades overnight. No issues with it. You know, every now and then you'll get like a black swan event, but it's really rare. So, however, with this, I was frustrated because I moved my stop loss to here, and I got slipped. I rarely ever get slipped with my broker, maybe once or twice a year, and it just happened to be last week when I was slipped and didn't have time to look at the charts. Got a lot going on. So anyway, let's flick on through. I did say no bar replay today. How far are we? About 20 minutes. So let me just exit the bar replay mode, and we're gonna see what we could have taken. All right, so this is probably the quickest way to be able to mark it all up. Now, what I forgot to do was boss and chock for the H4. We need to see what direction the market is going in. Now we had, all right, I'm going to do these like this. So H4 chock, H4 boss, and we will, for the moment, just do the bar replay so you can see how to do it. All right, so I wasn't going to do it, but we will do this because this bit is quite easy, but it's also quite important for determining what direction the market's meant to be going in, because we'll identify where our zones are, and if we can align the zones with the actual direction where we think it's going, we've got a high chance of reaching it. All right, so we know where our target's going to be. That's what sets us apart from the majority of the crowd, to be fair. So anyway, boss is down here. If we get a body break of this line, we'll be chopping up and we'll be changing direction. So at the moment, we're thinking that the market's heading down. We're aware of, you know, this consolidation area. We're aware of this up here as a potential further target because the daily chock is up here. So it means that the daily might return to up here. We've also got like an H4 up here. You know, that's an order block, all right? It's blocked orders. All right, so the way in which we do order blocks might be different from however else it's described on the internet, but we don't really care because we're right most of the time. But that's an order block, might come into play. So there are incentives for price to come all the way up, but usually halfway down a leg, and what I mean by a leg is literally just, you know, top to bottom. Halfway through, there's literally a condensed area, which was also support and resistance and, you know, supply and demand, etc. And we got a reaction started heading down. So bear that in mind. At the moment, price is going down. And then we got the body break. So what happens here is we literally move boss up here and we go to the lowest point, or the furthest point, let's say, between the previous structure and the break. Go there, so Choc ends up down there. So therefore we're now in an upward trend on the H4, but we're in a downward trend on the daily. So bear in mind the higher of the time frames takes precedence in terms of where you're actually going to be going. But if you've got nothing but a clear run, you've got nothing but imbalance, you're probably heading to a condensed zone before doing something. So if we can, we'll try to get into trades going up, at least into this area, which is what we did. And a couple of us held on to the trades. You know, I'm glad that the other guys in the group didn't move their stop losses, but I did. Don't know why. I think, yeah, I just had a very heavy week last week and I just didn't want to be thinking about what was going on in the charts. I was a bit over leveraged. I think that's what the issue was. So we're just flicking through. We got boss quite early on, which was cool. So we go to the lowest point between here and there, which is that. Then we got boss again, but we didn't actually get a swing apart from this candle, so it's kind of a bit of an iffy one. Then we got it again. We got the internal break. Don't worry about that for the purpose of this video. And then we got boss again. Therefore, Choc could move to here. So we're still going up on the H4 with this ridiculous rejection candle. Then we came down. I don't remember that breaking. Just checking the, you know, that. So the low was 869 and sorry, did I do that wrong? The low is 780 and the low is 784. So we didn't get a break. But we did there. Okay. So yeah, I remember that now. Okay, so boss went up to there and Choc moved ever so slightly, about half a pip. Sometimes it happens. Which means for us to switch our bias and get short, and really get short. So we were reacting largely from a zone based off of the daily. We were reacting from an H4, narrowed down to an M15 based on the daily direction to try and continue down to the daily boss. Okay, so technically speaking, we shouldn't be looking at shorts because, you know, H4 is long. We should only really be looking at shorts once we got the confirmation of a directional change, but it's so far away, we didn't want to wait for a break of this structure before coming back, retesting, and then heading down. Because we're quite accurate in our analysis, we were expecting a reaction off of this. We were right, as you're going to find out. So let's move on a little bit. Yeah, see? So yeah, that's what had happened. So why did I not take profit there? Okay, I'm just thinking maybe it's a lower time frame target that I was looking for. Anyway, dropping down to the M15. Oh yeah, so H4, this is it. So with Choc, for the way that we do it, I changed the strategy rules, or the rules of the strategy in January this year. And Boss and Choc is slightly different now. Okay, it's given us an additional edge in the markets. I think we're the only ones who do it like this, but we do not confirm our directional changes until we have a body break of the change of character. So for us, the lines stay where they are. All right, so M15, and just change that. Now, I think in my mind I was targeting further. I was targeting a break of this for some reason. It will come to me. I was targeting this because I wanted to get long out of here. So I was targeting down there. So it came really close. to my target, missed closing it on the Friday, decided to leave it. And I moved my stop loss to just above this, this wick right there, that news wick. Big mistake, because I think it was here, wicked me out. I don't know how, just got a spike out and it just took me out. It shouldn't have done, because it was quite a few pips away. But anyway, if it had kept hold of it, you know, and I went down to my target, which was over here, would have been about 11.5 hour. And yeah, look at that, it would have reached. So for me, I missed out on like 11. But the H4 at this moment in time was looking to go long, but we were expecting really price to reverse from here, and we were looking to get short. So we wanted to get a break of this structure and move down. Therefore even, we were looking at shorts on the M15 despite the H4 being in the opposite direction, because we now switched our bias for daily. Okay, there's quite a few rules to it, but we are rarely wrong. So bear that in mind. This was an M15 here. There's not enough in it to be able to take shorts. There was an M15 here, which we took a loss from. So I'm just going to get the X mark and just draw an X on there. There was this as a potential. If during the week, did it work? At the moment, no, but we might be taking that off if we do get an H4 trend change. Okay, so that might not be a loss, but we were expecting a bounce off of this. So just working price up, and if we were to have passed through, we were looking for a reaction off the nearest kind of swing point. So there's actually a loss here. It depends on what time this is. It's about 4 in the morning. And then 7:45, it's a valid loss. Now, I was thinking that this was going to be a good week. Anyway, we did get the breakdown. Not a good order block. There is one there, wouldn't have taken it. There's this, which looked like it had been leveled by that, so not interested. Price came up, rejected, bounced off, got internal break here. Nothing fantastic. There is a negative trade here that people may have taken. That's a loss. And then I think there was a switch of bias, because we did get a body break with these. So we ended up looking for longs, and therefore we'd have been looking at this right there. That's an M15, and the target would have been just here. So let me just double check this. If we'd have got an entry off of that, would we get big enough risk reward? Yeah, 4.28. All right, so the minimum risk reward ratio that we want to do is a 4. Okay, so a 1 to 4. And that's just because your win rate is about 1 to 4. Okay, so the minimum that you're going to be doing is that. So that should reset you. -1, -2, -3. We're now +1. However, we were looking for possible reactions off of this to get short again. If we look at the price action here, it has swept the highs, swept those highs, so like an internal high, swept these highs, came up, reacted off of this again, which we weren't expecting. However, we were lucky to get chopped quite quickly in that, so chock occurred right there, which means that on the way down, we could have got involved, and annoyingly, off of that inside bar, I didn't, just disclaimer, I didn't. But there was literally a trade off of that inside bar, even though it had been rebalanced. I wouldn't have taken that, to be fair. Bit risky. And then there's a structure there. Again, I'm just going to be rough with this and try to mark it in the places where we would be getting involved in. And you'll be thinking, why are you not getting involved off of the baseline? We try to get involved off the 0.25 when we're entering off the M15. Now, our target was initially going to be the swing, but you would I'll move that back. But the actual target should be H4 chalk line, but we came down to here before, so we'd want to go to the next zone. So break below the structure, it's about a 7, okay, so 1 to 7. Price is working its way down. We were aware that this was an H4 zone, so we're looking for a reversal, so an M15 reverse. Small possibility, but there was a trade that was my initial target once we reached this area to get long from here. Okay, so there's a long there which would have failed. But if you are patient, because it's an H4 zone, we do tend to look for chalk, or we wait for a press out and a press back in. So we didn't get chalk anywhere along here. Okay, so this didn't chalk when it pulled back. We didn't get any chalks occur here until literally right down here. Okay, so chalk came down, that was the chalk line, we literally burst straight back up. So we were looking for longs because we've just rejected this H4 zone. We're now expecting price to go back up to, well, to here. So we're expecting price to go back up to the base of this. So if we could, we'd look to try to get involved in any longs going up. Now, I'm just going to mark out where these order blocks are. So there's that last downward candle. There is this. If we got a break of the high, so the high on that, the high on that is 733. The high on that is 733. So don't take that off. This one is 1. It's not pretty, but it is 1. It's kind of like the last press down. Yep. No, wouldn't have got the entry. So that wouldn't have worked either. Price is working up, it's bossing up, going up, that's rebalanced. We've got, oh no, did I just mark that up? No, that wouldn't work. Press down, push up, internal break, pressing up again, rejecting back from this zone, rejecting from this area. You do have these to go from. So last downward candle, not quite stopped out, so we can mark that on. And our target, because this looks like it's pretty much the extreme apart from this all the way down here, your first target is going to be the same time frame swing, which would be that, which is 8.43. Next target is going to be the base of the next structure on the higher time frame, which is that 21%, which is not too bad. So there's a 21% trade there. Let me see what time this was, and interest rate decision. Okay, so great, but let's be honest, you wouldn't take that trade. It was a red news event. All right, so okay, that one comes off, but we now have a strong push up. What is the H4 doing at this point in time? Okay, so I'm just going to mark on here. Maybe I should have done bar by bar replay because this is taking some time. H4. So we did chalk down in the end, so we switched those. Boss came down there, chalk came there, so we were looking at shorts at one point as well. Yeah, okay, so boss and chalk had switched. We were expecting price to potentially come down. Although the Fed interest rate decision made us think, well, potentially it's going to be the rest of the month is going to be in that same direction. So what do we have? We have a support area down here, pretty much. It's being rebalanced, but it was the press down before the red news event. So, you know, it gets treated slightly differently. That goes on. And target is going to be the nearest swing on the M15, possibly to the H4. So we're expecting a potential reaction off of that, but where's the next area? Yeah, that's one where you'd possibly still be in it. That's what we'd be looking for. Yeah, it is. Because once that was broken, we'd have nothing but clear space. Okay, yeah, so that was what the target would be if you were to be in that trade. So 18R trade, If you just went for the break of the chalk, which is not normally a target, but still it's a 1 to 8, and that's where price would be now, pretty much. So good to see that that was previous chalk, and that's where price is playing about with. So we're pretty much retesting the zone. All right, that's now making a little bit more sense. Okay, so we got a strong reaction out of there. We got M15 chalk right there. So that means that we can start to look for potentially getting long on our trade. So there's a little mini swing here. There is one here. So these are all trades that you just be placing throughout the day if you can. There's a little awful looking thing here, which I think did actually play out. But even though it looks tiny, still a valid trade. So what time was that at? So that was near midnight. It was a spread hour candle, and then 1 in the morning, start of Asia, perfect time to get stuck in. You might even just want to take it to here, nearest swing, because it's just diabolical looking, or you continue it up. Now this is going to, I won't include this in like the video thumbnail, but I will show you just how mental this trade is probably going to be. And a lot of you will say, oh, but that's in the middle of the night. Well, is this not your job? You know, if your boss tells you to get to work at midnight, you're going to go. I bet you are. So, you know, first target is actually going to be the nearest highest point, which is that. So nearest swing, which is there. So it's a 7R. I will leave that one on and leave that as a target, and I'll count that in the results, because what's the point in adding all the way up there? It's going to be 100R. So let's just be realistic with that. You'd be scared. I'd be a little bit, you know, trepid taking that. 0.8, probably 0.7 pips if we were to measure that up correctly. Yeah, probably. Yeah, about that. So yeah, 1 to 9. And also, yeah, price came down, retested it again. But let me just move that out of the way. We ended up with another order block being left behind, because we got the breaks of structure right there. There was another one right here where we didn't get stopped out of. So we do actually have another one right here. So it was a good week. I had a feeling that it was. Just a little bit frustrated that I didn't manage to trade it. But that is life. Okay, so again, first target, just to, you know, you could pretty much move to break even here, but it's a 1 to 6. Then your next target is obviously going to be the next higher time frame zone, which is up there alongside that one. So target would be 57R. Cool. Okay, or you could just go for that break of structure right there. So we'll keep that in the results at the moment, because that's where price kind of currently is. And this would be a trade that you would take, because it is the extreme. It's still valid. It's the extreme of the H4 on the M15. So yeah, that loss is valid. So yeah, not a bad trading week. And then obviously we get the news events again. And I don't think there's any trades that I've missed. Don't think I've missed anything else. So really, like, quite a few losers that week though. 1, 2, 3, 4, 5. Not many losers. Okay, I thought it was more. And then winners, there's 1, 2, 3, 4, 5 potentially. You know, maybe 3. Oh, and also the one which I was in from the previous week, which should have worked out. So what's that? Call it 11. Let's round it down. 11 plus 4. That makes it 15. Tired. Round that up to 7. Okay, so 15, 7, 22. This one, let's bring that down to where price currently is. So what were we on? 22. That's 30. That's 39, and that is 41, 51. Mental. And bear in mind, news event comes in, bit of a beast. It reached 40R just by itself. So yeah, not a bad result. That was a long video in the end. Should have just done bar by bar replay. I think I've learnt a lesson for next time. But I am going to get this uploaded tonight, hopefully, get this ready for tomorrow morning, and hopefully do some backtesting videos again pretty soon. I want to do a big strategy video. Let me know in the comments if that would be useful. Big strategy video. Be a little bit like the one which I labeled mathematically unbeatable. It would be part 2 of that. Hopefully decent. If you see a different thumbnail and it's something to do with the maths of it, part 2, be sure to watch it. Ciao.